Hi everyone. Well, we just ended the worst first half of the year for the stock market since 1970. And as I continue to meet with you, and speak with the other Quest advisors, we know that it can be a difficult time when those statements come in, which is why I wanted to check in today. So although we can't flip a switch and get the stock market moving, we are laser focused on the things that we can do. Now, speaking of that, what is that? What are we actually doing right now to make sure we have a recovery plan for your assets? Vanguard actually did a study a couple of years ago that attempted to quantify the value that an advisor adds. And what they determined was that a decent advisor adds about 3% of total return per year, and that half of that benefit is based on one simple thing. And they call it behavioral coaching, but we look at it as helping clients stay the course. Now, what does stay the course actually mean? What I think it means is making sure that you are focused on how to achieve your long-term goals and not reacting to short-term fluctuations in the market. Trust me when I tell you that it's a much, much, much harder job than it sounds. Now, when Republicans are in power, the Democrats freak out and wonder if we're all going to kill each other due to the lack of gun regulation before global warming cooks us all and the entire planet goes down the tubes. When the Democrats are in power, Republicans think that capitalism is going to end and that we're all going to turn into communists. People are worried Putin is going to nuke us for aiding Ukraine, or that the dollar will have no value or lose its reserve currency status. We even had a client take money out of their investments not too long ago to buy a farm because they thought that the Russian invasion of Ukraine would lead to a starvation of the whole world, and they were actually going to farm their own crops in order to survive. And if half of the value that the Vanguard study says that I can provide you with my 24 years of experience, that is my life's work, is to keep you to stay the course, let's talk about how we might be able to help you survive the bear market that we're in today. Now, for those of you that don't know, I was actually an Eagle Scout when I was a kid, and I went canoeing one time with the troop to an area of Minnesota that has a ton of black bears. And the message I got before that trip was pretty simple. Bears can run, swim, and climb trees faster than I can, so there is no escape. And you might even know what to do if a bear does attack. And there's only one thing, and that is to play dead. And I think the same is true for this bear market. So far, there's really been nowhere to hide. Stocks, bonds, crypto, even gold a little bit, everything so far is down year to date. But just like a real bear attack, you don't panic, play dead for a minute, and when the danger has passed, sit up and think about your next move. Now, does that mean that us as your advisors are sitting around all day making these videos? No, of course not. We're laser focused on how we can help you achieve your long-term goals. And in the last quarter, we've done a few things to help that. We have changed the format of our weekly market update to make it user-friendly a little bit more. We've rebalanced all of the model wealth portfolios you see on your LPL statements. We have looked to take advantage of higher interest rates by upgrading certain investments that you might hold. We've held our first Q&A about the Russian invasion, in addition to our quarterly live webinars that we do. It was actually incredibly well attended. We had about 100 people log in, about another 100 watch the replay. We began reaching out in kind of like some smaller communications instead of the larger in-depth meetings. We just hired another paraplanner to make sure that we continue to be responsive to your needs and have the right staff for you in this changing market. So we'll end on a little bit of sunshine through the clouds with a quick data download. Did you know that 6 out of the last 8 bear markets were less than 6 months old before the rebound started? And do you know how old this one is already? This one's already 6 months old. The only ones that lasted longer were the 2000-2001 and the 2008 Great Recession. So hopefully we can see a turnaround coming somewhere in the near future with this bear market as well. Did you also know that historically, after the S&P 500 drops 15% or more in a quarter, which happened in the second quarter, that the index has gained an average of 6% in the next 3 months, 15.2% for 6 months, and actually 26.1% in the following year. So hopefully a little bit of sunshine there through that cloud. That could be a turnaround that could lead to some great returns in the next 6 months to a year. Did you also know that if you missed 10 trading days out of the last 15 years, that you would have lost more than half of your rate of return, and that almost all of those big days that you really needed to be in were at the bottom, right, when the market rebounds and just starts to come up? And that, did you also know that after a bear market, the average return, bear market being 20% or more down, the average return over 3 months was 20%, and the average return over a year was a whopping 42%. Now again, I'm not saying that the bear market's going to end today or tomorrow, but I actually think, unfortunately, that it could last another several months. But there is some light at the end of the tunnel. And I want you to know that we, as your Equest advisor or as the Equest staff, will help you do anything that you need us to do to make sure that you are moving forward on your long-term goals and not reacting to the short-term fluctuations in the market. Now with that, thank you so much for listening. We look forward to seeing you at our next review meeting, client event, or even next webinar, which should be coming out over the next maybe 2 to 4 weeks. Now, if you want and you care to watch, there's another 2-minute video after this I think was actually pretty good that talks about, are things so bad that they're actually good. Again, thank you very much and have a great day.
Vince Lombardi said, it's not about getting knocked down, it's about getting back up. Here's the question, guys. Are things so bad that they're actually good? Welcome to the latest LPL Street View. So guys, clearly I'm not in the home office. I'm out in Los Angeles, California, on the road, meeting with well over 100 of our top advisors later today, and I can't wait to get out there. And the clear question that a lot of us have is, this has been a terrible start to the year. What could it mean for investors? Well, the good news, we do think things are so bad, there could actually be some good news found in there. First off, if you look, this is one of the worst starts year ever. S&P 500 down about 21% for the year, the time we are recording this. You look back in history, guys, when the first half of the year is down 15% or more, like this year probably is going to be, the rest of the year is actually historically higher every single time, up almost 24% on average. Take another angle on this. We're looking at one of the worst quarterly declines ever this second quarter. When you have previous times we've lost at least 15% during a quarter, the good news, 2 quarters later, stocks have been higher every time. 1 year later, stocks have been higher every single time, up almost 30% on average. Last one. The last 2 weeks, S&P's lost at least 5% each of those weeks. That is massive, massive selling. Once again, though, you look in history, when these rare events have taken place, 1 year later, stocks have been higher 6 out of 7 times, up almost 30% on average. The only time stocks were not higher was in 1987. So the truth is this, things have been very, very bad, but it's all about expectations, all about the future. What if we can get some positive news on inflation? What if the Fed, which is going to aggressively hike, we know that, but maybe they start to pull back just a tad? What if, the economy continues to grow, right? So many people are talking about a recession. We're still in the camp. This is going to be a mid-cycle slowdown. All this bad stuff is priced in. What if we get some good news on the war front, right? There's a lot of places you can get some potential good news. And when stocks is oversold, historically oversold, only 2% of stocks in the S&P 500 as of last week were above their 50-day moving average. That is extremely oversold. And again, any good news at all could present a really significant buying opportunity and bounce. And we think the second half of this year, that is very, very possible. So guys, it hasn't been easy, but to reach your long-term goals, continue to follow the process. And we think, the second half of this year, things can be pretty good. We'll see you next time. Take care. Thank you.